The system has to reset. So we'll have this flood of money, and I know that right now they're saying, well, look, we've created all this money and we barely have inflation, and hey, we want that inflation to go to our 2% target. Well, look at your bills really. 2%, garbage. 5%, garbage. 10% is probably also kind of garbage anymore. And this is not going to get better at all. So this flood of the next flood of money that comes into this to try and keep all of these bubbles floating, especially since, I got to say, I know I'm not seeing it in the monetary velocity yet. I know I'm not seeing it there. But it sure feels to me like the hyperinflation has already begun. There are things that happen during these periods, and one of them is a lot of different things going on. And aren't we in a war? And I can't say it, but we're kind of in a pandemic war, aren't we? Isn't that what they call it, a war? And remember also the way wars used to be fought with boots on the ground. Well, we have some of that, but the wars that are really coming into play now between countries is the digital war and all of this cyber espionage. That's much cleaner. You do it from a distance, so we still have boots on the ground. But quite honestly, I think that's more for show than it is in reality. So yeah, right around these resets, you definitely have a lot of chaos. You have wars. I mean, think about 71. You had the Vietnam War. You had women's lib, Me Too movement. You had civil rights. You still have, Black Lives Matter. You had oil embargo. Look at what's going on in the oil fields when they went to negative last year, and now they're up around 60, 70 bucks. And before 2008, they were in the $20, $30 range, right? So it makes everything a lot more expensive. And even though we are moving more toward a digital economy, we still need oil. We're not done with that yet. In fact, you cannot even buy a bond that is not in book entry only form, which means you can't take possession of the certificate. And they're working really hard to get rid of your ability to take possession of stock certificates as well. But the bond market's the biggest market. That's the one that they had to go after first. So that means that these big banks are in full control, and they're the legal registered owner. Where do you fall in this chain? At the very, 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 very bottom. Because you are not too big to fail. Now, your family may consider you too big to fail, and I definitely do consider everybody out there too big to fail, especially when they're doing all of this garbage and putting you at risk when you don't even realize it. When you don't even realize the rising danger. But I hope you realize it now. I know it kind of seems like gobbledygook and so complicated, but remember, ignorance doesn't make you immune. It just leaves you vulnerable. And certainly our team at ITM, they understand all of this too. But I want to go back now to the OCC report. OECD, OCC, this whole vegetable soup. At any rate, this represents the notional amounts of precious metal contracts, so gold and silver contracts. And these are what are held inside of the FDIC insured banks. Now, I want you to keep in mind, Basel III went into effect. The Bank of England granted them an exemption, along with anybody else that wants an exemption. But had they not, then they would not be able to do this. So, I mean, I couldn't see how they would allow this market to implode, because once this derivative market implodes, whether it's precious metals or anything else, everything else implodes. The 10-year treasury and all other fiat money assets are rehypothecated, rehypothecated, and probably those contracts were done through the City of London. So there's no limits to how many times and what hypothecated means and rehypothecated. Hypothecated means that they're used as collateral. Rehypothecation means that they use it over the same collateral over and over and over and over and over again, which they could definitely do with anything that you hold in your brokerage accounts, your bank accounts, et cetera, et cetera. This is exactly what we've been talking about as far as this complex ownership chain because of all that hypothecation and rehypothecation. So Randy, thank you for bringing that up. 100 bazillion% I agree without any doubt. That's why, and that's supposed to be the safest thing you could do. No. The Bank for International Settlements tells you this is the safest thing that you can do. The central bank's accumulating it since 2007, but net buyers since 2010 tell you that is the safest thing that you can do. The market has to implode, which is deflationary, before the whole system can reset fully, because you have to lose all confidence in order for them to justify that very, 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 very painful move. So now, does it have to crash before the dollar becomes digital? No, it does not. Nor do I think for even 1 second that once they introduce the digital dollar, that everything's fine and hunky-dory and over. I don't think so. I think that is just a tool. So there's only one way, and of course the market imploding is deflationary. There's only one way to fight deflation, that's with inflation. And the point is that, and you can see it, I mean, it's so obvious, that every time the central bank was doing QE, it had less and less and less impact. It had the most impact at first. That's why when they went in during the pandemic and they did, it dwarfed what they did in 2008. And here we are, we're still struggling with it, right? It's still, they're talking about reducing the amount of mortgage-backed securities and treasuries. Actually, they've just mentioned treasuries, but it could be both. That they might start to reduce the amount of those assets that they're going to buy in November from 120 billion a month to I don't know what. And of course, we've got the debt ceiling looming, and we've got the Treasury needing to dump money into the system to meet their requirements. So my bet is they won't be able to print enough money.